Hello home buyers. If you are watching this video, you're likely just days away from closing on your house and getting the keys in your hand. So today we're going to be covering the closing disclosure. This is the document that a buyer who's going to be borrowing on a house will get usually about 3 days before they close, and that document comes from the lender. It's going to walk through all of the title fees, all of the lending fees, and it's going to help you understand how you get to the cash to close and also the costs of owning the home going forward. So as we dive in, we're going to be covering a link that's actually provided by consumerfinance.gov. It gives you full transparency and click down on each of the categories in much more detail. I'm going to include that link in the description below. I'm a realtor in Katy, Texas, so I'm going to be covering today what I usually talk through with my clients. If you want to get into more detail and actually read through this, that link is a great resource for you to go reference and read up on. All right, so as I mentioned, this site here is on consumerfinance.gov. Keep in mind that back in 2008, we had some problems with lending. There wasn't much transparency in lending, hence why we had all the problems with mortgages and foreclosures, so on and so forth, back in 2008. So after that, they passed a bunch of different laws that require this information to be delivered to you a few days before closing, and ultimately, it's to provide transparency to you, the buyer. So let's dive into the document here, and we'll go through the major sections. Of course, right in the beginning, it's kind of a summary page to recap a lot of the things you should know and you should have gotten when you shopped your lender in the beginning. One, you're going to have the borrower's information, and each of these you can have a click down if you want to read in more detail at a later time. But do you have the borrower information? You have basic information on your loan, your interest rate, and then your monthly principal and interest payment. Keep in mind, you usually have taxes and insurance too. This is your principal and interest. And then as you go a little bit further, it shows how your payment is calculated, and in the beginning of a loan, you might have what's called mortgage insurance, making your payment a little bit higher. Years later, as it gets to about 20%, give or take, of the equity in the home, you will have that drop off and go down there. This is an estimate on time, not a sure thing there. So when we're getting a little bit further, you'll see a breakdown of closing costs and cash to close. But you don't really have visibility on the first page as to what that is. And so we're going to get into the second page where we cover that in a little bit more detail. All right, so on the second page, you're going to notice it changes a little bit. You have loan costs as the category, and then you have borrower paid and you have seller paid. So if you're the buyer, you're not going to really need to pay attention to the seller category unless there's a cost that for some reason is in your side that should be in the other side. And sometimes mistakes happen, and that's why we review this right when you get the document, not down the road. Make sure that you sit down, go through the line items with your realtor, your lender, and just make sure that everything's buttoned up, that the things are on the right side according to the contract that we signed. All right, very good. So in the beginning, you'll have some things like origination fees. These are things like points that a lender may charge. And then you'll have services that borrower did not shop for. This is because the lender provided these services, and they'll often have different certificates and fees that they'll have included in there. While when it says services borrower did shop for, you might think, okay, I didn't really shop for these. They were given to me by the title company. Well, when we write the offer, we write in there who the title company is going to be, and that's where that is. A lot of times the seller will have a preference in the title company because they may have title already opened somewhere and done some pre-work to get that ball rolling. And so these are the people that will be offering things like survey, title insurance, so on and so forth. And there may be a few fees related to that fall on the buyer side as well. And these numbers are arbitrary. They're kind of random numbers, so don't necessarily hold these fast. If you want more of a detailed breakdown before you even get the CD and what your offer might look like on the cash to close, talk to your realtor. We'll be able to help you get some of those information as well. All right, so let's jump down now to other costs. These are things, of course, you got recording fees that basically records the sale with the county. You've got your prepaids. You need to usually prepay insurance on the property, and you'll often prepay interest for the first month and a half, because a lot of times when you buy a home, you may not have a payment almost up to 2 months. A month and a half, 2 months is common, right? And so they'll prepay that interest at closing for that time period. You also prepay things like property taxes, so on and so forth, to your lender. And then you have an escrow payment. So an escrow account takes money in from the buyer or the new owner of the property. And as you pay into that escrow account, they'll draw from that to pay things like taxes, insurance in following years. So they require some money to be in that account so that you don't have a zero balance, and then they'll ultimately stock that forward. So the lender will typically require 3 to 6 months in that escrow account at the time of purchase in order to have a little bit of buffer should, let's say, taxes go up or insurance go up. They have some money to draw from. All right, so as we get down further now, we get into other things. In Houston, Texas area, Katy, Texas area, it's very common to have an HOA. And in your contract, it outlines who's going to be paying what for the HOA. All of those fees will show up in here under this other section as well. And then we get a total for these other costs along with total for your closing costs. So that's how we got the numbers that you saw on that first page there of the closing costs. Now we're into the third page, and it helps show how it's calculating the cash to close. Keep in mind, this isn't a final number here, but it shows a breakdown of the total closing costs. It shows the down payment funds required. It has a deposit that you may have made as a credit there. And then ultimately your cash to close falls into this category, right? When we get into this, you'll notice again that you have borrower's transactions and seller's transactions. So you don't necessarily need to pay attention to the seller's transaction unless you see something in the borrower side that you think should be in the seller side. And that's something to be taken note of. But here we'll see what is due from the borrower at closing. So the sales price is mentioned in there. You have the closing costs paid there. And then you'll have a different section here, adjustments for items paid by the seller in advance. So here you might have things like HOA dues or other things where you're basically paying the prorated amount to the seller, things that they've already paid for. And then you may have things under here, which these are already paid on behalf of the borrower in closing. So this is a deposit or the loan amount that you're going to be getting because you're not going to be bringing the $180,000 necessarily to closing. You'd bring that as a line item in here. So the lender is lending you this amount in there as well. And you'll notice that there's a seller credit. This is a super powerful tool for buyers to be asking from sellers. It's under the seller concession piece, right? And you'll notice the discrepancy here. It says cash to close is $16,000, but because they have a seller credit, the actual cash to close is $14,000. So if you're wanting to lower the amount of cash that you're going to bring to close as a buyer, this is something, and it needs to be asked before you actually are a couple days from closing, but it's a super powerful tool that could potentially lower that total cash to close on closing day. Now keep in mind that the property has to appraise enough to be able to cover that, or it doesn't always work out in that scenario. But this can be a good tool to get that extra credit there as a buyer. All right, so this covers that third page in detail. And again, each of these categories, it highlights it here. I recommend you go through and read these if you have questions, you want more details on any of these categories. As we get onto the fourth page, this is more information about the loan. For example, is the loan assumable? What happens with late payments? All that kind of stuff. Definitely read through this in detail and understand the terms and conditions of the loan. They should match up to the terms and conditions when you shop the loan and follow through there. On the last page of our CD, you're gonna see some information here, more for transparency. Things like this, right? You have the total amount of the payments. Because you're paying interest over a longer period of time, of course, it's gonna be much higher than the actual loan value. Those extra interest payments add up over time, right? So you can accelerate those, so on and so forth, and pay that down earlier in many cases. And then the total dollar amount, what the loan will cost you, right? So this is basically your finance charges that are added in there, right? And if your APR includes, basically it's not just your interest rate, but it's also including the closing costs in the greater picture of this loan value. Is how expensive is the interest, including the closing cost to this loan. That's an APR. Great way to shop for loans also for future houses that you look at. And of course, at the bottom of this page, you have some information on your title, your real estate broker, your lender, so on and so forth to contact in this transaction. All in all, the closing disclosure will look pretty similar in most cases. You may have different fees show up on different closing disclosures. No two of them are exactly the same. However, this should give you a framework to understand what it is you're looking at, and this is a great resource to read in detail here if you have questions on specifics. Of course, if you're working with us, feel free to reach out to us, ask us any questions that you have on this closing disclosure. It's important that you ask the questions early so that we have time to fix it before closing and get that final closing disclosure out to you and in your hands. We'll see you at the closing table.